Right, so a new topic now. You wouldn't have covered any of this at primary school, so let's look at it. So it's called income tax, and basically the government is able to pay for schools, teachers, doctors, hospitals, roads, guards. They're able to pay for all of that because they charge tax on everyone living in the country. So if you've got a job, the government take a certain amount of what you earn, and then that goes towards running the country. They don't take all of your money, but they take a good bit. There's also tax on things like PlayStation games. So if you buy a PlayStation game of €50, say, about a tenner of that goes to the government in tax. So you all pay tax, whether you know it or not. But this is a specific type of tax called income tax, and this tax only applies to people who have jobs. Now, there's a few terms here that will be new to you. People that do business studies may have heard of them. I don't know what time in first year or second year you do income tax, but you may have heard of it. Now, so income is the money that you get paid. Now, gross pay means the money received before deductions. Net pay then is the take-home pay after deductions. So you might earn €40,000 a year, but you might only get to take home €30,000 a year. 40,000 is your gross pay and 30,000 is your net pay. Then there's a thing called a tax credit, and a tax credit is money off your tax bill. Everybody that works has a tax credit, and it works the same way as a credit note. Now I want you to think that, say if you went into a shop and you wanted to buy something that cost €100, but let's just say you had a credit note. If you had a credit note of say €70, so say your credit note was equal to €70. How much would you have to pay for this item? How much cash would you need to pay? Well, you would only need to pay €30 along with your credit note of €70. And that's what a tax credit is. A tax credit is money off your tax bill. Now then the tax rate is the amount of tax you have to pay. So in Ireland, there's a few different tax rates. Just for today, we're going to work with a thing called the standard rate of tax, which is normally 20%. So basically, for every €100 a person earns, the government want to take €20 of that. Or for every €1,000 you earned, the government want to take 20% of that, which is 200. Or for every euro you earn, the government want to take 20 cents out of every euro you earn. So let's look at an example of how we calculate it. John earns €30,000. He pays tax at a rate of 20%. He has tax credits of €1,500. Calculate his take-home pay. So how much does John get to take home at the end of the year? Well, the first thing is he pays a tax rate of 20%. So the government want to take 20% of everything he earns. So how do we calculate 20%? Well, this is how you calculate it. Multiply it by 20% in your calculator. So I'm just going to show you how to do that in your calculator for handiness. So there we have 30,000 multiplied by 20%. So 30,000 multiplied by 20, and see there's the percent button on my calculator. So there's the percent button. So if you want to calculate 20%, multiply by, you have to press the shift button up there. See the way it's an amber or kind of like an orangey color? You have to press shift and then the percent button will come up. And that calculates 20%. So that gives you €6,000. So the government want to take €6,000 of John's money. But John has a tax credit of €1,500. So remember what we said, a tax credit is money off the tax bill. So that's his tax bill there. The government want John to pay €6,000 in tax. But John can hand them his credit note of €1,500, so he can take that off the tax bill. So John only has to pay them €4,500 in tax. So what's his take-home pay? Well, John starts off the year earning €30,000. He has to give the government €4,500. So 30,000 take away 4,500 is €25,500. That's John's net pay or take-home pay. That's the amount that he gets to keep. Now let's look at another example, just exactly the same. Mary earns €35,000. She pays tax at a rate of 20%. she has tax credits of €3,000. Calculate her net pay. So, as before, the government wants to take 20% of Mary's money. So, she has 35,000. How do we calculate 20%? We multiply by 20%. So, now I know some of you will divide by 5 and that's okay, but what if her tax rate was 21%? You can't divide by 5 then, so I want you to get used to using this in your calculator. So 35,000 multiplied by 20% tax. And remember, we press the shift and then we get the percentage button, it's above the bracket. So, the government want to take €7,000 from Mary. However, remember, Mary has a tax credit of €3,000. So, we take away €3,000. So Mary only has to pay €4,000 in tax. So her take-home pay, she starts off with a gross pay of 35,000. The government take €4,000 off her. So therefore, she takes home €31,000.